Today, we're going to talk about 4 ways to make lots of money in real estate. Welcome to Achieving Success Through Failure. So, we're going to visit the first rental house that we bought and discuss basically the comps, how much we paid, how much renovation, how it looked like before and after, and how much our budgeting was, and currently how much it's making. So we're going to look at our first property, which was bought a couple of years ago. So we bought it at $337,000. We paid 25% down payment, and this amounted to $84,250. Our closing cost, $5,572.44. Interest rate, 3.375% for 30 years. This is a short video showing how the property looked like. It had multiple paints, different shades, different colors. And looking at the lightings, the good thing is the flooring is actually tile. There are things which we are looking at, which includes the electrical. Making sure everything is working, and if they are similar, here is the master's bathroom. You could see there's damage on the wall, also damage on the door, which is shown here, which we had to replace. And looking at one of the bedrooms, you could see there's also broken glass there. The wall has multiple colors in it with hardware in the wall, which we will plan to remove. Going through the walk-in closet, and now going outside, we will be removing these curtains and the entry for the dog. And looking at the patio, we will be replacing that old fan as well. However, if you look at the outside, it has a large backyard with pavers all throughout. Has a good view both on the north and the south side. And walking through the side, you could see an RV gate. These are all materials which will be removed later. So looking at the numbers for the renovation, initial plan for cost estimated was around $7,000 to $10,000, but it amounted to $25,000 with things which were unforeseen, even with inspection, and our grand total was $115,000. You could look at here are the rental income, the monthly expenses, and these are the breakdowns of those expenses as well. So after the renovation, we can see we chose monochromatic colors to make it bright and light. Also removed the doors on the front part to give it an open concept, and we kept everything with a light gray as well, and made sure that all the appliances are nice and clean. You'd also appreciate that the roof, we had removed the popcorn ceilings and repainted it as well. This gives it a more modern look. And you can see what we did with the garage, which is maintained the water softener. And all the lights we chose were yellow. Repaired the doors to the bedrooms, checking that the windows were repaired as mentioned previously. Here is the bathroom for the guest. You can see the walls are now repaired, also repainted. Light bulbs are working, fans are working. Going to the master bathroom. Right there, which is now updated. New granite top, and it was now leveled as well, with new mirrors installed. Overall, the shower and the bathtub are functional, so it was only cleaned with minimal updates. Walk-in closet there. Going outside. Here's the other bedroom. Now walking outside, you could appreciate the fan is now updated. All the other materials outside were removed to make it easy and functional. And there you go. So looking at the cash flow, it's at 7.89% at $750 per month. And this is basically the appreciation and amortization combined. And looking at the mortgage repayment or amortization, we break it down into every 5 years. You could see how that there is more money now paid towards the principal as years go by. And if you look at it, at the end of 30 years, it amounts to $252,000, which is the loan, but it averages at $8,425 per year in 30 years. Now we're going to look at the tax deduction, which is based on the depreciation. So this is the purchase price of the house multiplied by 0.8, which is the value of the house minus the land, and then you divide that by 27.5 years, which is what you can deduct every year on your tax income. Now, looking at the equity generated, you can look at the average market price of your house and then deduct the loan amount, and then afterwards you deduct the expenses related if you were to sell it. This includes closing cost, payment to the realtor, and whatever is left would actually be the equity appreciation. Also, the amount of interest paid in your mortgage is also a tax deduction. We're going to discuss the 4 things on how to make you money. Number 1, as we mentioned, cash flow. Make sure the property you buy actually does cash flow. How do you do it? Use tools to actually evaluate your property. And if you don't have enough experience, reach out to people and network so that you can leverage on their experience to help you get started. Number 2, mortgage repayment. Number 3, increase in equity from appreciation of the property. Number 4, tax deduction. Really big thing. And we haven't even touched about how to actually get more tax deduction if you're a real estate professional. And we're going to get on that on the next couple of videos. Lastly, my takeaway, plan on getting started so that you can take advantage on this one. Again, this is Paul Del Prado. Thank you very much for watching the video. Please click the like button and subscribe. I'll see you next week.